A mortgage broker is a licensee who acts as an intermediary between borrowers and lenders. They're not personally involved in the underwriting, funding, or servicing of the loan. Rather, they're a matchmaker. For a borrower to employ a mortgage broker listing agreement is used, RPI Form 104. Now, the essential terms of a mortgage are to be disclosed to the borrower by a broker soliciting or arranging a mortgage. How about an example? Consider a real estate broker who advertises they can arrange mortgages with an extremely low monthly payment schedule. A payment schedule so attractive that no other mortgages of this nature exist on the market. A borrower seeking a mortgage with the low payment schedule advertised by the broker retains the broker to perform these services. The borrower asks specific questions of the broker concerning the interest rate, late charges, due date, the final balloon payment, and mortgage closing costs. The broker misrepresents the probable interest rate and the day of the month on which late charges are incurred. The broker provides the borrower with crude approximation of the closing costs that are significantly lower than the actual closing costs. The broker also fails to accurately disclose other important mortgage aspects, such as the calculation of late charges. The broker prepares and delivers a financial disclosure statement to the borrower without explaining any of the contents. Rather than reading the disclosure statement, the borrower relies on the broker's oral representation and signs the mortgage documents. On closing, the borrower ends up with a mortgage far less favorable than verbally represented. As a result, the borrower incurs additional expenses and eventually defaults. The property is later foreclosed. Later, the borrower discovers the broker was aware of the actual mortgage terms and costs before the borrower signed the mortgage documents. Did the mortgage broker do anything wrong? Yes. Here, the broker's failure to disclose the actual interest rate and the details of the mortgage breached the broker's agency duty owed to the borrower. The borrower can recover all their money losses caused by the broker's misrepresentation and for failing to discuss important provisions in the mortgage documents. As the borrower's broker arranging a mortgage, a licensee needs to fully and accurately disclose all essential facts of the mortgage transaction which may affect the borrower's actions. The broker's obligation to deal fairly with the borrowers commences on their first contact with prospective borrowers to solicit employment. Even after the broker is employed as the agent of the borrower, their duty to disclose and provide accurate representation is not completely fulfilled by merely providing the mortgage documents to the borrower. The provisions in the documents need to be discussed with the client to ensure the client has an understanding sufficient to make a well-informed decision regarding the mortgage.